Okay, MegaWhale team, welcome back to our channel. Thanks for tuning into today's video. We're going to be taking a look at Bitcoin on the short-term time frame today and discussing our potential price action and where we think the price is actually heading in the next few days. We're going to briefly go over our macro charts to start with, just to outline a foundation of where we think the price is heading and our price predictions. At the end of the video, we're going to input a little insert from one of our collabs about interest rates, inflation, how those actually impact cryptocurrency, and what you can use, what information you can draw from that to sway your opinion or potentially confirm your opinion, or even just have the knowledge to be able to react to any market change. Let's go ahead and get into it. Before I do get into it, however, I do want to draw your attention to the pinned comment down below. Head over and join our Telegram channel. You can see our Telegram channel is over here. We post daily updates of market analysis, trading signals, and a whole range of more information. If you're interested in joining our VIP channel, however, if you're interested in trading signals, you can go ahead and contact me. You can see, for example, in the last 24 hours, an 170% profit on Matic. We've done 103% profit on Solana, 48% profit on GMT. All of our trading signals come with entries, targets, stop losses, and possible gain. Nothing is left up to speculation. It's incredibly detailed and make it as easy as possible for you guys to follow, with instructions and everything you need to find. Our VIP results since 2021 has been significant, with massive profits every single month, never having a negative month. Okay, let's go ahead and dive right into the video. So what we're looking at here is the Bitcoin chart on the short term. And like I said, before we get into that, I do want to quickly and very briefly run over a few macro charts. And we're going to spend a few minutes talking about these. This is the macro chart for Bitcoin over here. And this has outlined major supports and resistances throughout the entirety of Bitcoin's lifespan. Sorry, my bad, since around 2013. So 9 years. And we have this 9-year uptrending support line, which has represented the bottom on 2 other occasions of that bear market, the bear market bottom. We also have the uptrending resistance line, which has represented the uptrending resistance on 2 occasions and is more of a zone. So we find uptrending resistance within this zone. If you think about the channel, is this channel from this line to this line, and then this is a resistance zone that we've found. We have these blow off tops represented by these gray boxes indicating the top of each cycle. So we have 1, we have 2, and obviously our third one down over here. Okay, we have these yellow circles which represent the period of which we have a rejection or ejected from coming out of the blow off top into the next phase of the cycle, which is the bear market. So the bear market actually initially starts upon the rejection of this trend line. We have that over here, okay, here, and finally down over here again. So we've had that price basically head from this trend line all the way down to a bottom trend line, which we've seen on 2 occasions, which is over here again. I'm not going to adjust this line. We saw it over here, okay? We saw it over here in 2018, and we've seen it happen one more time, like we've said, for months again over here. The question is, guys, and the big question on everyone's mind right now isn't whether the support line is strong. It is a very strong support line. The question is, will this support line hold? Okay, and a snippet at the end of the video talking about the economy is really the deciding factor on whether or not the support line holds or whether we crash through, right? The economic environment is going to be heavily coming into play in regards to how this coin or how Bitcoin actually survives this support line, whether it crashes down or goes upwards. Okay, let's take a look at this chart. And this is the macro chart with the same points of contention, okay, same lines, just on the standard chart, not a log scale. So if we do lose this uptrending support line, which is on that log scale, that 18,000 level, which is represented by the support zone over here, we will see the price head downwards into this range, okay? So will the economic situation facilitate a downwards move? If it continues to worsen, if interest rates continue to rise, yes, and you'll find out all about that at the end of the video. If it does show some relief, we can potentially see a bounce from this zone and a little trickle upwards, okay? Which is also supported by the fact that this major trend line has found support on and acted as a bottom in the previous bear market cycles. That's enough about the macro, guys. I don't want to talk about too much. Let's go ahead and talk about the short term. So, few notable things. First and foremost, uptrending resistance, uptrending support. All right, we had a breakdown of a falling, or should I say, sorry, a breakdown of a rising wedge formation on the short-term time frame, and that rising wedge spanned for about 10 days, and we've recently broken down. All right, what have we formed now? We've formed what you would call a descending channel. This descending channel has been formed on the short-term time frame. Go ahead and copy this line across, paste it down over here, and we have our descending channel. Okay, descending channels are bearish, are bullish patterns. We do expect a bullish continuation after this. It is a downwards continuation that results in a bullish move upwards more often than not, right? Not always, think it's like 79 to 81% chance these continue upwards. So pretty high odds. So we do expect at some point a continuation, but in the meantime, this is a downward continuing pattern. So we do expect the price to continue downwards until we have that confirmed break above that resistance, and then we expect the price to continue upwards. Based on the measured move, it doesn't seem like it will continue upwards very high. The maximum move we can get from this would be around 22,000, most likely reaching this local top area that we saw on a multiple other occasions. Okay, so even with that move out of this ascending channel, it doesn't really give us the momentum we need until we break this level. This double top region over here, which we've represented again, is our short-term resistance we do need to break above before we can go ahead and retest this major resistance zone. We'll come back and talk about that one in just a second. Until then, guys, the targets still remain, and the targets do remain from the measured move of this rising wedge, which are as followed. We can go ahead and pull that one over. These levels down below, I'm going to go ahead and mark them out really quickly. We do have, of course, the most obvious one, 19,255. All right, and I'm going to go ahead and show you one thing. 19,255 lines up with the bottom of this wedge over here, which is also basically the top of the all-time high over here. All right, 19,255. Okay, roundabout. All right, give or take a few dollars. So moving back to our normal chart over here, we have 19,255. Of course, we also do have 19,760. All right, give or take a few dollars. And of course, finally, $18,000, which is our lower target expected by the measured move. Okay, so those are our targets on the way down. We do expect these to be reached. If we do not break this downtrending resistance, we will see a move back upwards. Okay, so very, very simple short-term analysis, guys. We don't want to go into too much more detail. Just keep it nice and plain and simple. Use the market to tell us where the price is going. We're not going to try predict where it's happening. We're just going to listen to the market and let the market show us, and then we'll just jump on board with whatever direction it takes us. All right, it's always the best way to do it. So let's go ahead and talk about the resistance range. You know, what actually will need to happen for us to flip? And this resistance range is dotted trend line. You must be thinking, what the hell is this? Well, this is a dynamic diagonal resistance. And it's a dynamic diagonal resistance zone because each of these dotted trend lines represent a horizontal, or should I say diagonal point of contention at each specific time point. So for example, at the 24th of October 2021, it's going to represent a different price in comparison to the 14th of December 2021. All right, it's a diagonal trend line. Now, between these dotted lines is where the actual resistance is sitting. And like I've talked about in previous videos, we'll use this for example, just for argument's sake. This whole area, distance between this area and this area is resistance, yeah? But the line itself here and here are stronger resistance levels in comparison to the resistance between these levels. So that's how a resistance zone works, okay? So the same thing is applied to this over here. We have resistance on these dotted trend lines, which is strong resistance, all right, or strong support, whichever way you're on it. And then between those dotted trend lines, we have, again, more resistance, but it's weaker than the resistance on these trend lines. So generally what we see is we see the price either touch the top and bounce, or crash right through and bounce. And of course, if we lose that bottom trend line as support, we'll see the price absolutely plummet, which we saw over here. Now, this holds true no matter which side of the trend you're on. If you're above it, it is acting as support with the same rules. If you're below it, it is acting as a resistance with the same rules. So looking at it now, guys, if we do push upwards from here, all right, and it's a very high chance we do because this is an ascending channel. If we do push upwards from here and break this, and if we do somehow break over here and push into this range, the next resistance point is along this downtrending resistance. All right, that's a target. All right, that's been our target for a while. If we break in past that, the next resistance is this level here. Now we'll go ahead and just go on a bit of a whim over here and show you what happens next. If we do, however, break this whole range, all right, that is going to be a confirmation of a reversal. Okay, this whole area here is technically reversed. If that whole area gets reversed, this whole area below the 200-day moving average also gets reversed. What does that mean? It means we have flipped that reversal point and we have technically reversed this short-term downtrend. For the macro downtrend to be reversed, we do need to break above this downtrending resistance of the macro descending wedge. All right. Now, do we have a shot of doing that? If we do break this diagonal dynamic resistance zone, we can see a push upwards into this range and retest this downward resistance. For us to be macro bullish again, guys, we do need to start clearing some of these major resistance zones outside of this downward trending diagonal resistance, which are these levels here. It is as simple as that, okay? So what should you be doing now, right now? Just in case you're new to a channel, you're thinking, I haven't heard any of this stuff before, I've got no clue what's going on. The most logical thing to do right now is to not purchase long-term holdings. And you must be thinking, why the hell would I not be doing that? Because the macroeconomic environment isn't facilitating growth. Even though the charts are suggesting we're close to the bottom, all right, and that's objective, the macroeconomic environment is not facilitating this or not confirming this. Again, you'll find out all this information at the end of the video. But however, I would be looking to purchase Bitcoin within this gray box. Okay, and I told you already, $18,000. We've had $18,000 for a long time. Ever since we lost this uptrending level, we said 24,000 was our target, 18,000 was a possible low. We said 24,000 was the target ever since we're up over here. All right, so we've been correct the entire time. The pattern was very, very obvious. The pattern played out 3 other times. All right, incredibly obvious. It would be stupid not to be able to predict this thing. Okay, so what should you be doing now? Continue to scalp trade. Most of your money should be in US dollars, all right, or stable coins or fair currency, whatever. All right, continue to scalp trade, make some profits. You should be looking to enter Bitcoin, all right, with minimal size, 30% max within this range. Okay, if it loses this range on a 3-day to week, that is when you sell. The level's been lost. We can expect downward price action to $10,000 to $13,000. Okay, if it does bounce and we break it back above the 200. Upon breaking this diagonal resistance and upon finding support, that is when your next entry should Bitcoin should occur. Altcoin entries should only occur, all right, for the long-term holding once this downtrending resistance breaks. And your biggest entries should occur when $48,000 flips, when we flip this uptrending or this macro horizontal level of resistance, which will lead us into a new bull market rally. Okay, that is how you should play it. Anyway, guys, I hope today's video has been informative, educational, and beneficial. If you do have any questions, leave them down below. We're going to quickly introduce Bitget, and then I'm going to go ahead and play that snippet from the other video about the economic environment. I really, really think it's important, guys, that you understand what we're talking about in the economic video, understand how everything works, why it works, and interconnection between the economy and asset prices in regards to cryptocurrency, because it's going to allow you to understand what is actually happening in the market. A lot of people are thinking crypto is crashing, oh no, it's dead. There's a lot more to it than that. There's always been a lot more to it than that, and we've used that understanding to actually assist us in this entire downward move. One of the reasons why we're basically the first people to predict this move was because we understood the global economic environment and we understood technical analysis. And although technical analysis can tell you where it's going, it doesn't tell you exactly where it's going to stop. So that's a really important thing to understand. Okay, guys, we're going to go and play those, and we'll catch you in the next video. Cheers. Okay, guys, so we're going to take a look at Bitget next, and I highly, highly recommend sign to Bitget. This is where I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up, and you get access to our reward center if you sign up. And there's a whole range of things you can do here to basically get rewards. And you know, the rewards bonus is up to $4,163 which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here, and of course, like I just mentioned, you get access to that reward center, there's copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video. Let's take a quick look at this, and I want to, before I talk about anything else, I want to go ahead and talk about this. Oh, sorry, my bad. I want to go ahead and talk about this chart over here later, and we'll come back to it because this is quite an interesting one that probably a lot of people have never seen in their life before. We'll talk about it in a second. Before we talk about that, I do want to go ahead and talk about the connection between inflation, interest rates, and asset prices, because this is basically what everyone's assuming is going to cause the leg down for Bitcoin. And Wolf, you were kind of talking about that earlier. You think one of the driving factors to why Bitcoin will lose that 9-year support is obviously the interest rates, correct?
Correct, yeah, to a certain extent, yeah.
Cool. So first and foremost, we have to classify risk. So we're going to come back to this word later on. I just want to mention it now, which is systematic risk. And we'll come back and talk about that later. But systematic risk is essentially risk that is out of an investor's control. So risk that is within an investor's control is the type of assets you purchase, the timing of your purchase, the diversification of your portfolio, and asset classes. Those are things that you can control, percentage allocation between assets. What you can't control is systematic risk. So stuff like inflation, interest rates rising, sorry, I got emails coming in, all that kind of cool stuff, monetary policies, fiscal policies, all that kind of cool stuff, all right? All that stuff that we hate. So anyway, inflation has been increasing rapidly, right? That's because there's been a lot of printing of money. I think Wolf talked about that in a couple. I remember like a video from like 2 months ago. You were bringing up that chart every other week with the yields and how much money has been printed every single in comparison to history. But anyway, going on a divergence over here. There's been a lot of money printed in the last few years, which has resulted in high inflation. Obviously, devaluation of the dollar results in higher inflation. All right, what does that result in? Well, it results in higher costs of goods. So costs of goods and services increase, which means people need to spend more money. All right, so how can the government or how can the economy combat this and bring this inflation down? What they do is they increase interest rates. And I've talked about this a lot on my channel. I've talked about this in basically every collab, but we're going to go into more detail in this today. So I want to quickly give everyone a nice little foundation before we go ahead and do that. So interest rates rise. What happens then? Interest on debt increases. So a lot of companies during low credit periods, so when interest rates are incredibly low, which they have been for the last few years, they acquire a lot of assets on low credit, on low interest. So they acquire these income producing assets on low interest, which means they have income producing assets producing future cash flow, which increases a company's valuation, increases the premiums, increases dividends and stock prices, which is why stock prices have increased. But we also have low interest repayments, which means their debt to service ratios are favorable, so they can continue to take these assets. So they're accumulating income producing assets at a low cost. Now, when interest rates rise, however, it flips. We have interest repayments increasing, debt to service ratios decreasing, future cash flows decreasing, and company stock price falling. What happens when the future cash flows decrease and the available cash flow decreases? They need to decrease their balance sheets by offloading risk assets. What are risk assets? Stocks, cryptocurrencies. All right, liquid assets, assets which can be liquidated into cash very easily. So that is one reason why we're seeing cryptocurrency fall massively and why we have seen stocks fall massively. And that's just the companies. We're going to come back and talk about that and show you a visual representation of why that occurs. Moving on, when costs of goods rise, retail obviously needs to spend more money. All right, they need more available cash flow because things cost more money. Not only that, anyone with long-term debt obligations, car loans, house loans, they need to pay more money towards these loans. So now they're going to be more likely to sell their assets to cash, all right, selling their assets to cash, or not investing in assets during periods of high interest to increase their available cash flows to spend on the cost of living and interest. So the economy is not facilitating, it's not only facilitating growth, it's actually enabling, or should I say, resulting in a degradation of growth or a drop in asset prices. Wolf, we've talked about this a lot. You've got a good grip on that already. You talk about that a fair bit on your channel, I assume. But that's basically the know-how. So let's talk about, I guess, how does that actually relate to this chart? Because this is an interesting one, because a lot of people talk about how cryptocurrency and stocks are, pegged together. And that's just not true. Cryptocurrency and stocks are not tied together. They are tied to a singular thing. So they're not technically tied together. They are correlated by a plus 0.7 positive correlation, not perfectly correlated, which means they move as systemic risk increases. If systemic risk increases, cryptocurrency and stocks return changes. Their beta value change. The risk increases and decreases. So we'll talk about this in a second, but first we need to identify what the chart is. So this is earnings, so potential earnings or return over here. We have our risk-free rate, which is the percentage return at no risk. All right. We have our variation or our standard deviation between the two different asset classes, so the correlation between. And we can see on this chart over here, we have our beta, so expected return on investment or overall risk. The difference between 0.1 and 0.2, the distance between represents the total risk. So the total risk between the assets. The distance between this point, which is stocks, all right, and this point over here is the total systematic risk, all right? The difference in total systematic risk, all right? And the distance in vertical height is not only the difference in return, but also the difference in non-systematic risk. We talked about non-systematic and systematic a few minutes ago. So what have we seen happen? We have seen a scenario where systematic risk has been increasing. Interest rates have been increasing. This has been moving downwards. All right, what does that do? Well, it actually brings this beta higher. So when systematic risk increases, the beta increases for the asset class. And a lot of people get a conception that, cryptocurrency and stocks are correlated to each other or tied or pegged, but that's not technically true. They're not tied or pegged to each other because as systematic risk increases, the returns and risk on both cryptocurrency and stocks increase. All right, the risk on cryptocurrency and stocks increase. So it's not that because stocks are, decreasing, crypto's decreasing, it's because systematic risk is increasing that both of these assets, which are positively correlated, move similarly, not together, they move similar. So that is a correlation between that. So what happens now when systematic risk decreases, all right, goes the other way, we have this decrease in the beta. So the risk between these assets decrease. So how can we relate this to the chart? And a lot of people think, what the hell is Whale even talking about? Well, what is it doing is representing exactly what we talked about here on, I would say, a mathematical chart. And how can we relate that to the Bitcoin chart? Well, if we move down over here and we assume that Feds are going to continue to increase interest rates, we can predict that the beta of these asset classes will continue to increase. The problem with that assumption, it is an assumption that the Feds are going to continue to increase their systematic risk. We don't have a confirmation. They've told us one thing, but there's no confirmation. So what happens if the Feds tomorrow decide, okay, we're not going to increase interest rates by as much next period, and we're going to start increasing our money printing again? What happens? Systematic risk decreases. Overall risk on these assets decrease. They don't decrease because crypto's bottom. They don't decrease because stocks are bottom. They decrease because systematic risk is decreasing and therefore returns are more favorable. When returns are more favorable, therefore meaning that the risk reward ratio for these assets are more favorable, people start moving money from cash back into assets. And crypto will produce more returns as it's got a greater systematic risk, a greater total risk, and higher earning potential. I hope that makes sense, guys. It's a lot of stuff to talk about there. But essentially what we're doing is we're providing some economic data or evidence to why the price will move in either direction based on the economic environment. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.